I'm looking at Intel, dreadful forecast. I'm looking at Microsoft this week, deceleration ahead. Are you hearing exactly what you expected to hear from these tech firms?
Actually, I think it's a little bit worse, but it's directionally confirmatory, Jonathan, with I think where the folks at Morgan Stanley have been, which is that there's definitive risk to the earnings profile as both pricing power and volumes decline, coming off what has been a historic stimulus over the last 2.5 years and a pull forward in demand. We used to say, that what happens to GM happens to the U.S. economy. I would say we're in a world, given the ubiquity of semiconductors, that what happens to Intel happens to the economy.
You can learn something from the incoming information, and you can learn something from the way the market responds to that data. What are we learning in terms of the market response?
Well, we're learning right now, to the points that have been made, is this is a investor-driven market where folks want to view the glass as half full. They want to look through the bad news and hope for better days. And their view is, the hope for better days is that somehow the Fed is going to miraculously start cutting sometime soon, and that's going to be the panacea for everything. We are in the camp, as you know, that suggests that is a little bit too much wishful thinking. And that a lot of what's really gone on here in the first, 4 weeks of the year is much more emblematic of flows. We have seen since October a massive global easing of U.S. dollar liquidity. How often do you see commodity prices round trip at the same time that the U.S. dollar is down 11%, at the same time that the United States Treasury stops issuing and sucking liquidity in, at the same time that the Bank of Japan is contemplating the end to yield curve control and the end to their bond buying program? How often does that happen? Never. And so we have seen this easing of financial conditions that is spectacular. It's flying in the face of what the Fed is trying to do. And I think it's all money flows that are driving this market right here.